Welcome to the Well Off Podcast, where the goal is to motivate, inspire, and share success principles. I'm your host, George Almasri. Jack Bernstein is a serial entrepreneur who currently runs his real estate business, Bernstein Capital. After leaving his corporate job in 2022, Jack now manages his portfolio and is a full-time real estate investor. On this episode, we discuss creating a startup at 18 years old, house hacking at 24 years old, building a $12 million portfolio without any partners or help from parents, and why he's currently interested in apartment buildings and what he's doing to acquire buildings. I know you guys are going to enjoy this episode. Jack is a really amazing young guy. He's been involved in businesses since he was very young and didn't come from any sort of background, doesn't have a family member that really taught him what to do. He kind of figured it out on his own. So hope you guys enjoy the content. If you do, make sure to leave us a 5-star review. And one other thing that I want to share with you is a couple of cool opportunities we have in Hamilton. So if you guys are looking for your next fourplex project, a legal fourplex, we have something that I'd be happy to share with you. And we also have a 2-unit property that we can share as well. So feel free to reach out to me if you want to discuss on Instagram, WellOffX, or go to welloff.ca and find my contact information there. Enjoy the episode. This episode was brought to you by Mortgage Dawn with Go Pineapple. I'm here with Jack Bernstein this morning. Thank you for joining me.
Yeah, thanks for having me. Looking forward to it.
Yeah, I always start off by asking about your childhood. So let's hear about it. Tell me where you grew up and a couple memories.
Yeah, sure. So I grew up in Mississauga. Grew up in kind of like a lower middle class, poor family. Family, just average people. Mom didn't work, kind of stay-at-home mom, and then dad was in like IT. So just very average people. Went to a pretty interesting school and area that I moved to when I was like grade 5 or 6. So we're living in a bit of a poor area, but it was in a super wealthy pocket that it was surrounded by, right? So
which area?
It was Lorne Park in Mississauga.
Okay, yeah.
Yes.
Beautiful area.
Yeah, so it's cool because it's, they kind of gentrified different lower class areas in there, but overall it was a very high net worth area, right? So I got exposure to a lot of like really cool families and people and stuff like that. And with that, it creates a lot of opportunities. So instead of just being young and going to your friend's house, like you would in a normal area, that friend's house might be like a 10,000 square foot house and, have some crazy cottage or this or that. So it opened my eyes when I was younger to a lot of like cooler things that I didn't know were available and I'd never seen in the previous area I'd lived at or never had any experiences with my friends or family. But overall, like super fun childhood, like very active, running around, always business orientated, starting little entrepreneurial things and stuff like that. But overall pretty fun.
What was your the earliest job or the first job, I guess, that you had, or that first business that you got into?
Oh man, there's so many funny ones. Like I used to have a paper route, and I used to run the paper route for a little while, and then I got kind of sick of running the actual route and like going after school and going house to house. So I recruited some kids from the local school that I went to. And then I paid them like 20 or 30% of what I was making off the route. And then I ended up taking 4 or 5 more routes. So I had 10 kids that I was subcontracting out the actual, delivery of the papers. And then I was basically paying them out, the week after getting paid. So that was kind of the first venture, let's say.
That's awesome. That's really cool. All right. So Mississauga, do you still live in Mississauga at this point?
Yeah, so funny enough, I moved out, bounced around for a little while, was in Whistler for a couple years, then came back and was living in Oakville for 5 or 6, and then was fortunate to be able to kind of move back in Lorne Park in an area that I loved about a year ago, which is awesome.
Cool. Let's dive into the real estate stuff. So I know before we started recording, you said that you had a bit of a journey before getting into real estate. So you had a startup, then you worked full-time in a corporate position, and then you kind of got into real estate full-time. So just maybe you want to just tell us a bit about that.
Yeah, so early off, when I was younger, I was a professional snowboarder for 7 or 8 years and did that whole thing. And then as that kind of phased out and, I battled with some injuries and kind of realized that, I might be able to make a small career out of it, but not anything spectacular. I decided that, going the entrepreneurial and business route was more so suited to my personality. So I started a startup, which was an electronics manufacturing company. And after 4 or 5 years, we grew to about 12 employees from the age of when I was 18 to 23. Honestly, it was like the best experience ever. While all my friends were in university, I was kind of doing what my family calls street school. So learning as I go and, building the company and running operations and sales and the whole 9 yards. And I ended up actually taking an investment from a small private equity company in Oakville. So a bunch of guys that went to Cornell, like early 80s, 90s, had great careers, and then came back together in their retirement, started investing in a bunch of small tech companies that had some sort of sellable product. So after working with them for a couple of years, it just made sense to either, raise a huge pot of cash or sell out some shares of the business and kind of keep it status quo. And for me, when I realized that the business was never destined to be a big business, it made sense for me to kind of sell out my shares of them and then move on to the next venture.
Cool.
So, 18 to 23 were very interesting years. It was very, very cool.
Did you have any support from somebody? Like, how did you know what to do? Because I'm thinking about when I was 18, I had no idea what to do with any sort of business. I was just working, and getting an hourly wage. So where did your knowledge of business come from at that time?
Honestly, a lot of it was winging it and then understanding that I needed help and just asking. So I'm a big believer, if you just go to people and you ask for help, and especially when you're a young person, right? Like when someone sees someone who's 18, 19, 20, and they're, an astute business person, maybe, later in career, a lot of people are willing to help you out as long as you just recognize, their success in what they do, right? I find a lot of different business people don't get the recognition from their family or their kids that they want for how hard they work building their businesses and stuff. So when someone third party comes and kind of recognizes them for that and asks for their help, more than, almost 10 out of 10 times they're willing to help you in some capacity.
So who were you asking for help?
Honestly, everybody. Like, there's this funny story that this supplier that we had. So he has an electronics PCB, so printed circuit board facility in Mississauga. So it's this like 200,000 square foot facility where they have all these robots that make actual circuit boards, which I needed for my product. And I called this guy one day and I asked to speak to him for the CEO on the phone. And I'm like, hey, I'm 18. Like, I need to build a circuit board. I need like this production quantity, whatever, but I have no clue what kind of circuit board I need. And he almost like laughed at me. Like, he definitely never got a call like that in his life before. So he ended up reluctantly taking the meeting with me. And we sat down and he probably, what should have been a half an hour meeting, ended up becoming like a 6-hour educational session on like, manufacturing and all the rest of it and how it worked. But we ended up building a great relationship, and through just talking to people and, being proactive and trying to find mentorship, that really helped. And that was also something that taught me through my snowboarding career, that having mentorship is super important. And through whatever business I've done, before and to where I am now and all the businesses that I run now, it's been something that I've put a huge emphasis on.
Mm-hmm. And it sounds like you're still a big believer of that, because you were just saying that you've recently joined a real estate team. So I'm kind of getting ahead here, but you got your real estate license and now you're working with somebody who's pretty accomplished in, I guess, the field that you'd want to be in. So maybe we'll dive into that a little bit as well.
Yeah. So recently I hooked up with Mike Rockall and Mark Baltazar. So we kind of have a little real estate team that we have going on through Keller Williams. And Mike's had a pretty astute business selling larger multifamily buildings. And through my kind of connections that I've developed through my real estate investing journey and my businesses, it was a good synergy where I have a lot of residential real estate investors that are trying to size up their portfolios. So guys with 30, 40, 50, 60 units that are made up of duplexes, triplexes, quadplexes that want to sell off their portfolios now and try to grow through larger acquisition. So we're helping a lot of different people transition through that process. And through a lot of Mike's really good connections and Mark's connections, we've got really good deal flow on larger buildings.
Mm-hmm. So that's your real estate sales business. Now, what about yourself as an investor? How did you, I think you started investing in your 20s, right? So how did you go from, being an entrepreneur with a startup to an investor?
Yeah, so there's a bit of a weird period in between where I've I say this to people sometimes where I'm a bad employee. So I like being entrepreneurial. I like kind of guiding my own schedule and having freedom of time for myself. And I'm more than happy to work like the 80, 90 hour work weeks as long as I know that I'm the sole benefactor of it, or I'm working towards like a common goal with friends or people that I want to build stuff with. So when I sold my shares in my startup, I ended up going into tech sales. So I was selling enterprise software for some Fortune 100, Fortune 500 companies. And through that, I met a bunch of people that were older that I was working with. And I could never figure out what they were doing with all their money because they were making huge commission checks, but they lived just super average lives. And what I ended up finding out was that they were all buying real estate and investment properties with it. So what happened is after a while, I started banking pretty good money and I'd made some other really good investments on the side. And the natural selection for me when I was 24, 25 with their guidance was, okay, just go and buy a property and house hack it. So I ended up finding a property in Oakville that was very easily duplex convertible. And I went and bought that property and then just kind of jumped into that project cold turkey.
What year was that, by the way?
That was 2017. So it was a blessing and a curse, right? I don't know if everybody remembers 2017, but 2017 was the year of the stress tests. So at the time, it created a lot of challenges because overnight it just essentially crushed the market. But what it taught me as a longer-term and full-time investor now is that real estate's cyclical and over-leveraging can really hurt people, and understanding the peaks and valleys of the market as a long-term investor, risk adjusting your returns is very, very important. And now that we're kind of in the second big cycle since then, it really helped how I kind of grew my portfolio in the long term.
Mm-hmm. So 2017, first property, Oakville. Did you end up house hacking? So you lived in one of the units and rented out. Did you have to do any work to it, or how did that go?
Yeah, so bought the property, put all my money basically into the down payment, closing costs, all that kind of stuff. I can't remember why, but I was ineligible for like less than 20% down. So put 20% down. I think it was like a $640,000 purchase price, and then I put about $25,000 to $30,000 finishing the unit downstairs. And I had like this epiphany, aha moment in real estate where I always knew real estate was, the path for me, and I liked it, but I never had something that really like sunk my heart into it yet. So when the unit was finished, I had it listed for $2,200, and I had an employee of mine at my startup that approached me and said, "Hey, I'm looking for a place. Like, this would be a good fit for me. Do you mind if I put an application in?" So being a young landlord and never having a tenant, I thought, you know what, it's probably a good idea. I know the person, I'm comfortable with them, like they're reputable, and they've worked for me for a long time. And he had an interesting proposition. So he came to me and he said, "Listen, I'll pay you $2,000 a month instead of the $2,200. And I'll give you 24 months cash up front for all the rent because it yields me a 10% automatic savings on my money." So essentially he said, if I'm going to put my money in the bank right now, I'm going to get whatever return on it or invest it or put it in some sort of, non-risk adjusted investment. This is a guaranteed return for me. And I said, okay, it kind of makes sense. And I just remember being 24 and him just handing me like $24,000 in cash for the year, like physical cash. And I was like, oh my God, I love real estate. I'm like, the amount of effort it took to make this compared to what I'd have to do at work to make $24,000 after tax for a commission or something like that. I'm like, this has got to be the solution. Mm-hmm. So then I spent the next 12 to 24 months just trying to put the mental, capacity together and basically the education to be able to pull off my next deal. Right there, I knew I wanted to buy more real estate, but I was constricted by, what people call limiting beliefs. So I kept talking to mortgage brokers and they're like, no, you can't qualify for more. And I was just having, issues with house prices starting to recover and all that kind of stuff. And then I figured it out when the next correction started happening, and I got another triplex in Hamilton at that point. And then after that, then COVID hit, and then the market and COVID dipped. And I always remember my friends at the time being like, let's save up our money. When the next dip comes, we're all going to buy. And then, of course, what happens? The dip comes, and then everybody gets scared. No one wants to put their money up. So I still distinctly remember we had like a group of 5 friends. 3 backed out and said no. And we said, like, guys, this is what we've been waiting for. And then another friend of mine, we did go in, and then we bought another property there. So then now I'm kind of, an operating landlord. I'm burning properties at this point. I've educated myself enough to get in the market, but maybe not educated myself enough to scale. So I've got, I don't know, maybe just under like 10 units at this point.
This is 2020 you're talking about?
Yeah, 2019 going into 2020 for both of those properties.
Okay, so you had a couple properties, triplex in Hamilton, the 2-unit in Oakville, and then a couple other ones.
Exactly.
Yeah. Cool.
So then at this point, what I decided to do is like, okay, if I want to take this seriously and turn it into a business, then I got to invest like harder in education, and then I got to start compounding my growth on acquisition. So I ended up investing in some mentorship stuff, some paid, some unpaid. And I found some really, really good, strong people that were provided to me, through the Jewish community, which was fantastic. So essentially what we have in the Jewish community is it's kind of like an unwritten rule where anybody who's over the age of like 55 to 60 has like a moral obligation, almost like a mitzvah, to give back to someone that's earlier in their career at no additional cost for them.
Cool.
So I got assigned 2 different mentors who were later in life that had built substantial portfolios.
How do you get connected to them?
So there's people in the community that facilitate it. So basically there's like a organizational body that it's called the UJA that basically does a lot of community events and stuff like that, and across Canada, not even just Ontario. And they basically run the program. So, there's the mentee side and the mentor side. You basically say whatever industry you're in. And then when someone comes along, they essentially match you up.
That's cool. Do a lot of young people that of take advantage of this? Because like that's a really good opportunity for young people to get free mentorship. Do you find that your friends have done it too, or is that not really something that's too popular?
No, I'd say something that's super popular, at least in our community. Like my brother is in the film industry, and he got hooked up with someone that's, had an amazing career producing movies. My little sister, works in government, and she's got a government liaison and someone that's worked for the DA's office, in the United States in New York. So I honestly think like, religion or culture aside, it's just something that everybody should do, right? Like anybody who's had a successful career in whatever they've done, I feel like has some sort of moral obligation to give back to someone else starting in that career, right? Because, knowledge transfer is one of the most powerful things. And the reality of the situation is like people try to do as much as they can, typically to their children, but your children don't necessarily probably appreciate it as much as maybe someone who's external and starting out, with no support and grinding. Mm-hmm. And, my parents never gave me any money for pretty much any of the endeavors I did, like nothing for any of my real estate. But most importantly, what they lacked giving me was knowledge transfer. Mm-hmm. And I realized that at a young age, and then that became more so my soul, searching for whenever I was doing, just trying to align myself with like-minded people that were where I wanted to be.
Mm-hmm. Cool. So tell us what you learned through this mentorship. Like how did it help you grow?
Yeah. So honestly, it was pretty incredible. Like when you hear someone talk about how they have, built like a 2,000 unit portfolio with like 2 million square feet in Canada, it's hard to hear because you hear about these guys in the United States doing it all the time, or it's like a publicly traded REIT or this, that, whatever. But the thing with that he really taught me is honestly, it's just consistency, and it's about building over time, right? Mm-hmm. And he said something to me funny. He's like, listen, you're going to work your entire life. You're going to build this huge portfolio, and most of the time your kids are going to be the ones that benefit from it. Yeah. But he's like, the exciting part when you look back on what's fulfilling in your life, if you're truly passionate about real estate, which, both of us are, he's like, the journey is more powerful than the outcome of it. Mm-hmm. So when he reflects back on like the grind of how hard it was to build it, he says that's more satisfying than what he has now.
Sure. For sure. Yeah. I mean, if you don't love doing this, then it's not worth it, because there's a lot of stress. There's a lot of like stuff that we have to deal with as investors that a person working a 9 to 5 doesn't have to worry about. And so obviously, there's got to be a little more to it than just wanting to be wealthy or whatnot. So there's got to be satisfaction in the journey, like you said.
Yeah, I think the money and the wealth is the byproduct of it. Real estate's a weird industry where it's very capital intensive, so the money has to be a big part of it too. But it's funny, right? People see on social media and stuff that all of us real estate investors, you have this many houses, this many doors, but it's like a game of being rich and being poor. And the money comes in ebbs and flows all the time, because whenever you get a large chunk of cash, it's not like you're going out and buying a Ferrari or doing this, that, and whatever. It's always just getting reinvested into another project, another renovation. And in 10, 20 years, once your mortgages are paid down and rents have gone up so high and that gap is so big, then the fruits of the labor start to become more real. But I tell my students this all the time, like, cash flow is an illusion in residential real estate investing for the first 5 years. And I think a lot of people thought that wasn't true when we were in a low yield environment in 2021, 2022 and 2020. But the reality of the situation is where we are now. You got to get more creative with your deals.
Yeah. So are you coaching as well? Is that part of what you do?
Yeah. So I had this like weird kind of breakthrough moment on my real estate investing career in 2021. I had a Toronto Life article came out, and it was essentially talking about how in 36 months I had built a $7 million real estate portfolio without any partners, any family money, strictly from scratch. And then overnight I had like 500 or 600 people reach out. And I remember laying in bed thinking, oh my God, this is amazing. I've built all this great brand exposure for myself, but I have no way to monetize it. So funny how, public media attention comes out and what you get. And they warned me about this ahead of time. So they said 40% of people who are going to reach out are just going to be tire kickers sending whatever messages. 40% are going to be people with some sort of inquiry or ask. And the common denominator of most of those asks was that they wanted to figure out a way to do what I did. And then the other 10 to 20% they said is just like hate mail, racist stuff, whatever, right? And it just comes along with those kind of pieces. So the 40% of people that reached out with the ask, most of them were asking me, hey, I want to learn from you and I want to be able to emulate what you did. So I laid in bed one night and I'm like, oh my God, how do I monetize this? Because I have all this attention and literally no way to make any money off it. So I started my coaching program there, and I started a shorter term coaching program to essentially help people get in their first investment property. And then I've grown my full-time coaching program now to about 18 or 20 full-time students, which is kind of where I like to keep it capped, because my real full-time business is investing and, the real estate brokerage stuff. So that part I really, really like. It's kind of what I focus on Monday and Tuesday, helps pay the bills. And then the rest of the week, I just get to focus on straight growth stuff.
Yeah. Cool. So you do that article. Well, that is really impressive. So 7 million, is that, was that like a net worth figure, or was that just the holdings that you had?
Assets under management. Yeah. So
okay.
yeah.
Assets under management. Yeah. So, and that was without partners. So that's what I want to ask you. When you were working with your mentor, did he recommend continuing to grow without partners, or did you ever talk about that, or just what was the opinion?
This is Don Chen, mortgage agent with Pineapple Financial. Today, I want to introduce you to a special mortgage product called Readvanceable Mortgage. The special feature about this product is that as you pay down the principal portion, it auto-converts into a line of credit. And this allows you a cost-effective way to access the equity in your home without having to go through a refinance or incur high legal and penalty costs. I would love to connect with you for all your mortgage-related questions. You can reach me at 647-961-3281, or you can find me on Instagram and Facebook at TheMortgageDon.
So it was interesting, right? Because at the time, like, the JV conversation was super hot back then. Everybody was on podcasts, YouTube, everybody was getting money partners, putting in 100% of the cash. They're taking half the deal, cut up a bunch of different ways, whatever. But I was super fortunate where my software sales career was taking off pretty well, and I was making really big commissions on stuff, and I was able to self-fund my entire portfolio. So still to this day, I solely own my portfolio, and I've built it up to about $12 million of residential multifamily real estate. But as we know with the times where we're at, the government's just making it so difficult to scale residential multifamily portfolios further. And I think the common denominator between everybody is you got to get into bigger stuff at some point.
Mm-hmm. Exactly. You also had, you said, a paid mentorship. So how did that go? Did you benefit from that, or did you find that your unpaid mentorship was more valuable? Just out of curiosity.
I think they're different in a sense where the unpaid mentorship, you get a certain time period with someone where you cherish it and value it extremely because that person's worth so much money, and it's just, you really, really appreciate the time you're getting, but it's limited. You can't be calling them every week and calling them for stuff all the time because they're running a huge business. Whereas the paid stuff, I found it was really good for the more tactical, this week I got to do this week I got to do that. And I've always been a very, very structured person, but what it did was it allowed someone to have a paid interest in my business that looked in every week and said like, hey, you should make this small tweak, you should do that, you should speak to this person. And I think what happened in that program was I ended up taking, everything I could out of it for the first year. And I think after that, the returns were probably a little bit more diminishing if I did it the second year. But I realized that a good mentorship program and a good mentor should never want to coach you forever. And they should want you to either exceed what they've done and pass you on to someone else, or they should want to see you basically be an independent investor at that point. Mm-hmm. And that's how I coach all my students. So, I've had some students that are coming up to the point where they're going to exceed what I'm doing now. And I'm so grateful and so excited to see them do that and branch off and, leave their job and kind of do real estate full time. And it's come to the point where I've like branched them off to other people, given them other connections, or some of them are going off and doing their own niches and they're becoming, really good experts in whatever they're doing. And they're even teaching some people.
Mm-hmm. Yeah. Just to kind of go back on your paid mentorship, what would you say would have been the biggest takeaway from that? Maybe one or two major takeaways from it.
Paid mentorship, I guess one of the biggest takeaways from it, I would say, is consistency of conversation, right? So when you know that you have someone that you're talking to every week and you fully invest in that mentorship, and you trust that person, then you feel bad if you let them down for what you said you were going to hold yourself accountable for that week. So if you were maybe going to get 10 tasks done in a week and you were on your own schedule, with a paid mentorship, you might get 12 or 13 things done because there's someone that you don't want to let down. And the compound effect of having that for 52 weeks a year, ends up being that you would do what you'd probably do by yourself in 2 years in one. Mm-hmm. Then there's the other thing of the knowledge transfer, right? And someone helping open doors for you and then also removing barriers. So if I'm in the middle of a deal and I'm transacting on something and I'm having issues with closing, my numbers, I don't know, that, something goes wrong with the deal, which in every single deal it does. Most of the time, as I would say, being a more sophisticated residential investor now, I can figure out those barriers, but sometimes you can't. Or sometimes you more so need a connection that they might have that can help with the barrier for you.
Yeah, for sure. It just makes me think about when I had a coach a few years ago. Some of the major things that I got out of it was being pushed out of my comfort zone, for one, and constantly being pushed out of my comfort zone. And then also just kind of following advice and not questioning it too much. Sometimes I'd wonder, like, why are you asking me to do this task? But then later on, after I had done it, looking back a few months after, I'd realize, okay, it makes a lot of sense why I did this. So, I think those are some of the key things. And it's really cool to be able to follow in somebody's footsteps and have them push you and take you to places you didn't think you'd go.
And the huge part of that is trust, right? Like if you don't develop a wholehearted trust and have confidence in their ability, then it diminishes the whole mentorship and coaching, because I would say 50% of people don't respond well enough to coaching where they're going to get as good of a benefit as some other people. Like some other people get the 4x, 5x what the results should be, and some people might see a 20 to 30% incremental gain. And it's more so just because they're maybe not ready to have that kind of growth themselves, or they're not fully confident that maybe whatever they're being coached in is what they're passionate about. Mm-hmm. And I remember with snowboarding, when I was a professional snowboarder for a long time, my first mentor and, one of my best friends now, he was 10, 15 years older than me. And it came to the point where if I was going up to like a 50, 60 foot jump, trying some, trick I'd never tried before that I could essentially get super, super hurt on, I trusted him so much that if he said, go try it, like I knew wholeheartedly that he was looking out for my best interest and he knew my skill level and I would go do it. Mm-hmm. And I've had that with some of my mentors in real estate and some of my other businesses where if I'm going down a route and maybe it's a thought that I'm not 100% on and they tell me to go do it, then I typically go full force in it and just believe that, they're looking out for my best interest. They know better. I should probably do it.
But it's also the confidence you get from them believing in you, right? It pushes you to be able to do things that you weren't sure you'd be able to do.
Exactly. 100%.
Yeah.
It's a special bond, but it can't, it has to be an organic bond. It can't be forced, right? You either like have it with the person you don't. It's like a chemistry thing.
Yeah, for sure. So let's dive into this partnership with Mike, who's been on the show. Mike Rockel and Mark Baltazar have been on a couple times. How did you guys come together, and what are you guys working on now?
Yeah, so funny enough, I've heard their show a bunch, the podcast. It's a great podcast, and they're super, super knowledgeable guys. And in a pretty short period of time, they've built up like a $50 or $60 million portfolio and have all the stuff going on with their fund, which we can talk about too. But I thought when I became a realtor, I said, you know what, I'm going to focus on mostly my deals. And that was the intent of it. COVID was happening. There wasn't much going on. I'm like, I got free time. May as well save myself some commissions. And then what I realized is when I launched that I was a realtor, I had a huge influx of people that had been following me for years that wanted help on the residential investment side for me to give them guidance on it. Plus my students were looking for someone to kind of give them guidance on that part too. And the brokerage I was at, which is Keller Williams, when I was onboarding, they had let me know that Mike was actually at the brokerage because I talked about my investment experience, and that's the area where I wanted to focus. So I went to a trade show, and I knew Mike was going to be there, and I actually approached him, and I said, listen, I know you got a really successful business going on the broker side. You've also got the fund that you guys got up and running, and you got a huge portfolio of larger multifamily buildings. How can I add value to you? And I straight up said to him, I said, listen, my 6 different businesses that I run right now allow me to kind of pay all my bills and live comfortably. What I want to do is I want to offer you Wednesdays every single week where I'm going to come work for you for free. Do whatever you need to do. I just want to learn from you. I want to learn how to buy big apartment buildings, and I want to learn how to transact on them, because my portfolio, of $12 million of residential real estate stuff now isn't going to be able to scale on the residential side to $100 million. So I knew that I hit my wall and I need to get into bigger stuff. So Mike kind of mulled it over a bit and then got back to me and he said, yeah, I think it's a good time and good partnership. I've been thinking about forming a team on the broker side for a couple years now. And ever since then, we've just been kind of working together in a couple different fashions, mostly on the broker side. But, I'm also an investor in the fund and investor in some of the syndications and help do some stuff with them. And it's been super, super interesting. Like some of the stuff they got going on there are like big visionary stuff that I want to be around and be a part of. And I encourage anybody who's, trying to get involved in that kind of stuff to reach out to us. There's a lot of cool stuff happening with the fund as well as some of the other deals.
Cool. So it all kind of happened organically, right? He was already looking to add someone to the team, and then you had heard about him, and it just kind of came together. It's usually the best way that things happen, right?
Yeah, and I think where like the synergy really lies, right, is, him being super, super busy with all the businesses he has going on, and me having enough education to be dangerous on my side, but maybe not a professional on the larger apartment scale. I knew 90% of what I needed to kind of come in, and it was a pretty smooth transition for me to start doing work with them. Whereas maybe someone who's green, it would have taken them a couple of years to get them ramped up. So I think it really made sense. And I would say, the 3 of us are pretty like-minded, but it's been awesome working with them, and kind of from like an informal mentorship standpoint too. I learned a lot of stuff from them as well.
Yeah. Do you have a goal for, your next purchase? Did you set some goals around that?
Yeah, so I've started selling off a couple properties. I have some other ones closing soon, so portfolio value will probably stay the same, but essentially I'm starting to free up capital to start putting some of my own LPGPs together. and then plan on taking down something 15 to 25 units this year is kind of my goal.
Cool. So you attended a conference recently, an apartment building conference, and you said you picked up a lot of kind of market statistics and that sort of thing. Is there anything off the top of your head that you want to share with us?
Yeah, so the last week was the apartment building conference, which it's really cool. So a lot of people, I would say, don't know about it. It's not like an advertised conference. I think the reason for that is obviously there's all the REIT owners and, a lot of billionaires and a lot of people who own, 10,000 to 50,000, 40,000 units in Canada. But when you're in a room with these kind of people and you just hear the conversations that are going on, you really get to understand a lot of the macro that's going on in Canada. So some of the main takeaways, essentially what they were saying is that they're planning, CIBC's economists there and RBC's economists were saying that they're planning for one more rate hike in December, and then they see stagnation in rates for a couple months. And then they're actually predicting the first rate decrease end of May to June kind of area. So whenever that hike is supposed to be expected from the BOC, announcement. Which was super interesting. But now, inflationary data came in today and it was 4%. So it's a negative indicator, obviously, for what's going to happen in December. So who knows?
Mm-hmm. So just to clarify, the economists believe that the first decrease will happen in May 2024?
That's what they're saying, yeah. So both RBC and CIBC, their chief economists, were both basically saying the exact same thing on that, which is very interesting.
So an increase in December, potentially, and then we start seeing a slight decrease early or first quarter of next year, maybe second quarter.
Yeah, so they went into about half an hour of reasons why, different indicators and stressors on the environment. But one thing they said that was super interesting is that, obviously until the data came out that inflation year over year was 4% this month, but previously it was 3% last month. And they were saying that the BOC's benchmark of 2%, we're actually pretty much at 2% if you take out the indicator of mortgage interest and mortgage payments. Mm-hmm. So if you take that out of the equation of CPI, then we are essentially at 2%. So another conversation they were having is that maybe the benchmark of 2% isn't actually the long-term reality anymore, and maybe it should be 3% going forward. So obviously that's a high-level conversation that needs to happen with people, but the stabilization of that kind of stuff is there. And then the other X factor is we just had a contraction in the economy last quarter, and then if we have that again at the end of the year, then now we're in a technical recession.
Mm-hmm. Right. So, yeah, it'll be interesting to see what happens. Was there anything else that you got from that conversation between the economists?
So there was one super interesting piece of information that I've been having conversations with all my students and a bunch of other investors. So the government of Canada this year, as we know, they're huge push on immigration. And what they have in the media all the time is basically their number this year is around 1 million. So they're going to have 1 million landed immigrants come in here with some sort of permanent residency visa, which is going to put the supply and demand matrix for either rentals or housing way out of whack. The part that they talked about that most people don't ever mention is super, super interesting. So Canada just let in 4x what we've ever let in before of foreign students. So we actually are giving it out 950,000 student permits this year. So there's essentially an extra million people coming in that are unreported from what the government talks about of students. And then what the economists want to talk about is that how the government looks at student visas is that once a student visa expires, the government's expectation from how they calculate population is at 30 days after they're out of the country. Mm-hmm. But CIBC did an internal study, and the reality is 90% of immigrated students that are on student visas end up staying.
Right, because I think when they pick up a job, I don't remember exactly, but I've read some articles on this. I think when they pick up a job after graduating, then they get a PR, right?
Exactly. So they can apply for PR, they can apply for job permits, this, that, whatever. So the scary thing is the reality of the $1 million, the 1 million person immigration that everybody's talking about is actually really more like 1.9 million. So it's essentially double. So as a real estate investor, think about, how do you benefit off that, right? So student housing, I think in smaller towns that have satellite campuses, are going to explode. I think overall just building is going to explode in general. The government's trying to incentivize that, but there's also some issues happening there. And I think just buying any rentals in basically any area that's student focused or in a city that has a large school, I think is also going to benefit from it too.
Mm-hmm. Yeah, like really any tertiary market's going to really from Toronto out, it's all going to grow. There's going to be more and more demand. Supply's not catching up. It's kind of that common thing that we've been discussing for years. So investing in real estate is probably going to be good over the next few years.
Yeah, and it's so weird because the government's pushing this whole thing on more supply and this, that, whatever. We're immigrating. It's going to make everything better, whatever. But the false reality of it is it's not. And one of my mentors, he runs a company. I'm not going to say which it is, but it's a huge builder and publicly traded company. And they build about 20,000 residential homes per year. And most of their investors that they use for a lot of their different projects are large pension funds. And he was saying that over the next 24 months, the new start builds that they were going to have, they're actually stopping 40% of those projects because a lot of their pension fund investors that they normally have had to write down tech losses last year and this year. So essentially what that means is that if their allocation limits for their pension funds or their insurance funds are 20% of total assets under management, when they wrote down all these tech losses, then all of a sudden it put their real estate portfolios over the 20%. So for 2023, they couldn't allocate funds to all these projects. 2024, who knows if they'll rebalance the portfolio and there'll be more money going into it. But from a builder who's building 20,000 residential houses a year, which is a large builder but not one of the largest, like that moves the needle and not in the way that we want it to be moved.
Mm-hmm. Yeah, the economy is an interesting thing because everything's intertwined. Like you change the interest rate or you impact the interest rate, it dwindles down to so many different areas of the economy. So we'll see what happens. But I think the rate thing, that seems to be the common thought, that there will be potentially another increase and then hopefully that's it. But who knows? Who knows? I guess the key thing is just like be smart moving forward. Don't over leverage. Make sure you run your numbers a million times and look for opportunities. Don't stop. Like you can't just be afraid and not do anything moving forward unless you're just in a position where you really can't.
Yeah, like buying deals right now is the best time to be buying deals. So yeah, you're going to have your interest rate differential, but if you're buying a property with, let's say, a 7% interest rate right now, and it's residential, or if it's a larger multifamily, it might be a bit higher, and then all of a sudden the rents are going up in perpetuity with rates increasing, because as we all know, rents are out of control, skyrocketing right now. At some point when rates get cut in half and then you refi at 3.5%, 4%, that differential between where your market rents are at and then where your carrying costs are creates a huge buffer for you, and then that's where you truly see the value of long-term real estate and asset holding and stuff like that.
Sure. And there's also VTB opportunities. Getting under sort of the market rate through a VTB is another option. So there's a million ways to do it. So we've covered a bunch of things. Do you feel like there's anything you still want to touch on? Anything we may have missed that's important?
No, I would just say that, like, from what I'm seeing with some of the institutional buyers and some of the hedge funds and stuff like that and other funds that we work with, is that people are very bullish overall in the sentiment of real estate right now, especially in Ontario. And I had this conversation with, a super wealthy investor not that long ago. And I said, do you think people can sustain the rents here long term? And he said something that stayed with me that was so interesting. He goes, 50 years ago in Shanghai, in London, in Paris, New York, LA, everybody went through transitions where the next generation just expected to never own and they were going to rent for forever. And I had a conversation with someone who was like 22 or 23 the other day, and I said, why don't you just try to stay at home a little bit longer, save up the money that you were going to pay moving out to rent, and then just try to buy your first place. And he said, honestly, he's like, none of my friends really expect to like own. Stuff's so expensive now, like I'll probably just rent. Like it's not a high priority for me. And I think in Toronto, we're literally seeing that transition happen to us in front of our eyes. So it makes me be more bullish on owning rental properties now so than ever.
Yeah, for sure. for sure. I haven't really questioned or asked anyone in their early 20s what their thoughts are, but yeah, it's an interesting topic if they're starting to believe they're only going to rent. But I guess that's some people. There's still a bunch of people, I'm sure, that feel confident they'll be able to own. It's just a matter of perspective.
Well, it's a mindset thing, right? It's like people who have someone around them to instill it in their mindset, or they want to make change, like they can. I have a student that makes $50,000 a year, and they figured out a way to buy 3 properties over 4 years. Mm-hmm. It's been a grind. It's been challenging. It's been very creative deals and whatever, but because they had determination, they did it.
That was kind of my situation when I bought my first place. So this was in 2017. I was a couple years into real estate, but I wasn't making a lot of money at that time. I was making a decent amount, but probably netting about like 50 or 60K. And I was able to buy a property. Then the next year I bought another one and just kept going from there. So it's always possible. It's just, like you said, creativity, sometimes going out to cheaper markets, like that kind of thing.
Yeah, 100%. It's always a determining factor, right? Just how hard you want it.
Yeah. To finish things off, how do people reach you? What services are you offering?
Yeah, so I got a couple different businesses now, mostly all around real estate. Like I have my coaching business, which obviously I've had for several years now. I help people out on the residential real estate side for investment properties as a broker, and then also with Mike Rockall for apartment buildings. But always happy to chat with anybody. Feel free to reach out. My website's bernstonecapital.com, or follow me on Instagram at bernstonecapital.
Cool. Appreciate you coming by today, doing this in person, and I look forward to seeing your growth and staying in touch.
Awesome. Thanks, brother. Appreciate it.
Thanks for listening to this episode of the Well Off Podcast. If you enjoy the show, then I'd really appreciate if you left us a review on iTunes and let us know your thoughts. In order for us to get a larger audience, it's really important to have reviews, so your support is extremely appreciated. And also, don't forget to share the podcast with your friends and family. Until next time, I'm George Almasri. Have a great day.